Hello, everyone that's watching. My big apologies for running late tonight. I'm just having a couple of little technical issues, and I have a video that I've been desperately trying to upload for you because it's from a real estate agent in Perth that does a high volume of sales. And for those that are looking in Perth, you would have come across a guy called Mark Grogan from ONeill Real Estate. He works in the Armidale, Seville Grove, Camillo area. And he has done a video for me, and I'm having trouble actually getting it on uploaded on here for you so that you guys can watch it. So what I'm going to have to do after this session is I will get it all to you so that you can listen to it, because I had asked him some really good questions about what can investors do to increase their chances of making their offer get seen and get noticed. And he also shares a little bit behind the scenes from his point of view of what is quite frustrating with investors when they make contact with an agent. So he is brutally honest. It's exactly what everyone that's looking in Perth needs to hear, and I can't get it uploaded, so I'm sorry, but I will get that to you because it's super important. So thank you to everyone that has joined. For those that are watching the replay, I welcome you too. I know that there's a lot of people that will be watching the replay today. And I am excited to now share with you the market updates for around Australia. So some of these have been pre-recorded and some of these are live as well. So Jo Natoli is from Rental Specialist in Sydney. I'm just going to bring her to the stage to start off with, and she can kick it off, and just bear with me as I get through the technical stuff. Hopefully it's coming across okay on your end.
Thank you, Ash. Hello, everybody. I'm Jo Natoli, and I'm the principal of the Rental Specialists. I run a property management only agency in Glebe in Sydney, but we manage properties across the whole Sydney metropolitan area. So the market at the moment in Sydney is not as frenzied as what the media is making it out to be right now. The media has been talking a lot about the rental crisis and huge demand and little supply. And whilst we are experiencing a supply and demand imbalance, it is not the frenzied activity that we had seen a few months ago. In saying that, we are still getting excellent and quality inquiry and volume of inquiry for our rental properties, but more prominently in the western suburbs of Sydney rather than around the city and the city fringe, and I operate in both markets. In terms of time on market, days on market, we are finding, look, I'm leasing properties within 7 days. In some cases, there is absolutely no vacancy whatsoever in the western suburbs of Sydney, so around the Penrith and Blacktown areas. In the city, however, is a little bit of a different story. I recently had a property in Rosebery that was on the market for 3 weeks. I've had a property in Redfern that was on the market for 3 weeks as well. So very, very mixed pockets around this Sydney area. We're getting fantastic inquiry, however, and the quality of the tenant applicants is fantastic as well. Now, in terms of rental increases, we went through a period of about 6 months where rental increases were happening every single month, and we saw increases range from 7% right up to 33% in increases. We found when we drilled down to the numbers more, that the higher increases, anything from 20 to 33%, we found found that that occurred mainly when properties became vacant and then they were released to new tenants. The majority of the rent increases with tenants in situ were between around about the 9 to 16% mark. Overall, Sydney is still performing very, very well. Yields are good at the moment. We are still seeing increases, but not at huge levels now. It's a fantastic time for to be a landlord in Sydney right now. And that's
Hey there,
it for
guys.
me.
My name
I'm
is
going to
Melissa
hang
Hickson.
around for a
I
little bit.
am from Prime Residential and we're located in the west of Melbourne. So thanks for having me today. So look, the overall Melbourne market is quite busy at the moment. We're actually finding that there is a shortage of rental properties. They're calling it a rental crisis at the moment in Melbourne, which is not like something that we've recently had, which is really great for investors in the current market. We're finding that there's a large number of groups coming through our properties at any one time. So for most of our properties, we're getting registrations for anywhere up to 10 to 20 people coming through or being registered for a property, and about 60 to 70% of them are coming through for inspections. We are getting a lot of applications on our videos. We're getting a lot of applications prior to inspections, and we're also getting people that are offering increased rental prices as well. So there's definitely a demand for rental properties in Melbourne for investors. At the moment, in our core area, we're sitting at about a 1% vacancy rate, so fairly low for our area, and the market is very competitive. Again, we're finding that there's a large number of groups coming through our properties, and that people are applying for a lot of properties as well. In saying that, there is a lot of applications that are not high quality, so we're sort of finding that a lot of them are being declined. There is a lot of people at the moment that are applying for properties that don't have great rental history, so that's just something to keep in mind if you are currently renting your property, making sure that your agency is looking after the rental references to make sure that they're done properly. The vacancy rate in our area is about 1%. The inner city of Melbourne is sitting just around 3%. So still really good numbers for the Melbourne market. Rentals are increasing dramatically, so we're finding that increases are going through with lease renewals, as well as when the properties become vacant and then we put them back on the market. So on average, our rent increase is looking at around sort of $30 per week, which is again unlike Melbourne, so a really great time for Melbourne investors, and it's definitely a peak leasing period for us as well. Normally it kind of dies down into winter time, but at the moment I'm finding that it's still quite consistent, which is great. A lot of renters are renewing contracts, so a lot of them are not moving out of properties. They're staying in a property unless they absolutely have to move. And we're finding that most of the renters that are accepting a new lease are extending even with a rent increase as well. Overall, really, really good numbers coming through our properties, really good rental in terms of prices, and they definitely have increased. Look, obviously, we don't know how long this is going to sustain for within our area, but it's definitely a great time for investors to have a property in the Melbourne market at the moment, because there is a flood of of renters and very little rental properties that are available for the people that are actually selling their homes and looking to rent. So we're also finding there's a lot of people coming through different states that are actually moving to Melbourne, which again is unlike Melbourne, because most people like to go to the warm rather than the cold. So look, overall great news for Melbourne. Reach out if you have any questions and I'll be happy to help or put you into someone who can help. We mainly are looking after the western corridor of Melbourne and the inner city of Melbourne. So overall the Melbourne market is quite busy, and it's really a great time for investors to look at renting out your property. So yeah, feel free to give me a call if you have any questions, and yeah, we can take it from there. Thanks, guys.
Hi, I'm Kylie Walker, the owner of I Think Property, and we specialise in real estate in southeast Queensland. We currently have offices based in Ipswich and Toowoomba. And the market is definitely changing, and there's a few reasons for this. Of course, interest rates and the cost of living is getting more expensive, but there's also a new legislation in Queensland which only allows us to increase rents once every 12 months. And then we have another new legislation coming in on the 1st of September, which is the minimum housing standards legislation, which is going to make it very difficult for landlords to put off dealing with a lot of the maintenance issues. And this is going to cause a lot of pressure for investors with older style properties that do need a lot of tender loving care put back into them. Tenant demand is still huge right now, and we have under 1% vacancies across the board. Currently, I only have 5 properties available for rent, and we're getting at least 10 applications per property with strong numbers at open homes still. It's taking us less than 2 weeks to rent properties. And rental prices are increasing, which is great news for investors, despite all the new legislation changes. And they are increasing by between $20 to $80 at lease renewal or re-advertising. And again, this is largely because of that legislation or that price increase freeze, where we can only put the rent up once every 12 months. The only issue with Ipswich is that sometimes it can be hard to find really good quality applicants. But you know, we obviously have to follow our strict processing protocol, but sometimes it can take a little bit longer to find a quality tenant. Rents for 4-bedroom properties range between $500 to $600 per week, and that is across Ipswich, Springfield and Toowoomba, and that is around a 5 to 6% rental yield. It is hard to find properties under the $400K mark for sale in any of those areas. Although in Ipswich, just in the last week, we have seen a few older investor stock properties coming back on the market, and they've been advertised for the high 300s. They do need a lot of work and a lot of renovation done to them. Sales prices have stabilised, but they are up almost 10 to 20% across the board. Median sales prices in both areas are around that $500K. And with the interest rate hikes, we are already seeing a few investors have already put their properties on the market. We're also receiving a lot of requests for bank valuations, which I feel is a sign of things to come. And more investors will obviously look to jump out while the sales prices are still high, especially if we have a couple more interest rate hikes. Bellbird Park is a great investment opportunity for those seeking long-term returns with the potential for solid capital growth and rental yields. Redbank Plains, Springfield and Ripley are also performing really well. Ripley has a lot of new build opportunities with a lot of development still going ahead in that particular part of town. In Toowoomba suburbs to look at investments in Glenvale, Harristown and Carney Springs. If you want to learn anything more about Ipswich, Springfield or Toowoomba and whether or not it's the right investment opportunity for you, or if you have a property in that region and you want to see if it's performing as well as it could be, I'd be more than happy to have a chat with you. If you'd like to reach out to me on social media at That Property Mum, or visit my website ithinkproperty.com.au, or just give me a call. Thank you.
Hi there, Jason Wright from Essential Property Management in Adelaide. Our company manages properties from as far south as Aldinga and as far north as Freeling, and we do a little bit in Balaclava. So we've got a really broad knowledge of the area. The market in terms of buyers for investors, I do a lot of attending open homes on behalf of investors from interstate, and I'm still seeing anywhere from 40 to 80 buyers at each property. The big issue is there's not a lot of stock to buy, but it's still yielding very well. We are just starting to see the rental market turn. So in the northern suburbs of Adelaide, still very high demand. Our best performing property in the last 6 weeks has been a 4-bedroom, 2-bathroom. We put it online for $680. It went to price war. We got $720 for it. We had 187 inquiries and 86 applications. Down south, we're starting to see turn a little bit. So our days on market down south are now more like 16 to 18, whereas it's always been 5 to 7. But that doesn't mean that it's not still a great time to invest in Adelaide. I just think we're at that little bit of that moment in time where people are being a bit nervous. People will start to come back. There's an influx of students and international visa holders coming in the early part of next year, so it's still a great time to buy. Over to you, girls. Thank you.
Hi there, my name's Nat Yaxley. I'm from View Real Estate down in Hobart, Tasmania. I am a property manager down here and I am on the ground managing property. So I just wanted to give you a brief overview of how we've found the market in the last 3 months, and I hope you find this helpful. So just some stats to start with for Greater Hobart. We've got 525 vacant properties at the moment with a vacancy rate of 1.9%. So compared to this time last year with only 193 vacant properties and a vacancy rate of 0.7, it is a little bit different out there. So supply and demand. We are finding that the rental prices have dropped. We've got a median rental price of now $575. That has dropped 4.2% in the last 12 months. That's an average price for a 3-bedroom home at the moment. The units and apartments, though, have increased. So, which I do find quite interesting. Over the last 12 months, they have increased by 8.1%, with an average rental price for an apartment or unit in Greater Hobart being $535 per week. So there's the stats for you. As I mentioned, I am on the ground firsthand managing property. So I just wanted to let you know it's been a little tough for the last 3 months out there. We're finding open homes haven't really worked much in our favour. So a lot of private viewing, so ducking in and out of the office to try and meet people there. A lot of virtual inspections as well, just trying to make it really easy for people to see a property to get at least. Lots of our tenants have been breaking lease as well, so often chasing a property with lower rent. Cost of living is really hurting our tenants, so we are seeing a lot of that. The average days on market for a property to be leased are stretched out to around the 24 to 28 days. So while we are absolutely still leasing properties, it is definitely at the lower end of that price bracket now and not the higher end of the rental range that we are giving people. And so rent increases, those tenants who are wanting to stay on. Most of our tenants at that point are wanting to stay on, so we've got around a 98% rate of that. But rental increases have been minimal this time around, the 1 to 2% increasing. So, that is reflective across the state at the moment, just with cost of living. So again, that's what I think this is all getting back to. But, it's tough out there. We've just got to buckle in. But good news is people still need homes and we are still leasing them. Thank you so much for listening to me this evening. I'll speak to you soon. Bye.
Hi everybody, Tamika Smith here from Key 2 Property in Tasmania. We represent the north of the state and I'm the director here at Key 2 Property for Property Management. Really excited to be telling you a bit about the investment market down here. It has been relatively slow for the last quarter, but we are seeing investors starting to get back into the market, which is really great. At the moment, we're seeing about a 5 to 7% return on investment, which is really good and nice and strong. That's where we want to see our investment returns at the moment. Some really hot suburbs at the moment are your Kingsmeadows, Summerhill, Newstead, Norwood, Prospect. They're really good areas in and around Launceston. They're showing really strong returns and they're also showing quite a good demand in the market that we're in at the moment for really good quality tenants. Our northern suburbs are not doing quite as well at the moment, but those sort of western and southern suburbs are doing really well. Other areas that are performing really well for return on investments are our rural suburbs. So suburbs like Perth, Evandale, Longford, Westbury and right through to Deloraine. They're also really attractive pockets for investors, especially if you are considering potentially moving down here one day. Or you're looking for a different kind of demographic of tenant. These are definitely our good farming communities and have got quite a strong demand. So they're really good areas to be looking at the moment. Our vacancy rate has blown out a little bit. At the beginning of the year, it was almost 0%, and we're now sitting at about 1%. So it is a little bit higher, but that is traditional for this time of year. So nothing that I think to be concerned about at the moment. There's some slight price reductions in the rental properties, but I think that will settle down coming into the summer months when it is our peak period again. Investors that are leasing at the moment are doing 6 or 18-month leases to get it back into the summer period so that they've got the best opportunity to secure the right tenant at the right price and have a bit more of a choice when it comes to tenants, because there will be more applications at that time of year. We're also seeing average rental returns at the moment are about $500 a week for your standard 3-bedroom home, and that's sort of $380 to $400 a week for your 2-bedroom home. So that's really great. And they've held relatively steady over the last sort of 6 to 12 months, which is really good. So if you're looking to get into the rental market in northern Tasmania, there are some really hot little pockets that are still showing really good return on investments. We would love to hear from you and love to help you out with your investment journey.
Thank you so much. It's Tara Bradbury here from Active Agents in Harvey Bay, Principal Leasing Agent. Harvey Bay is in regional Queensland, which is located 3.5 hours north drive of Brisbane. We have seen some changes, funnily enough, since the last update that was provided to all of you who were able to attend the original webinar that was presented. We are starting to see some changes across both sales and the property management side. We've only just launched into sales from October last year, but from what I can tell you that the sales team have been telling me is that they are starting to see more sellers come forward that are starting to feel a bit of that financial pinch from the interest rate rises. And I've certainly myself started having some of those conversations with some of our investors that are within our property portfolio. Now, quite a few of them have looked at the option of getting an appraisal and jumping on the market for sale and testing the market. And some of them are getting the review, checking it out, and then holding back to see what happens. So it will be interesting to see what comes between now and the next catch up, because we're certainly starting to see here in Harvey Bay a lot of those questions being asked by our current clients and people that are external to our business as well. On the rental side, our vacancy rate is currently at 1.1% in the area. So we've now gravitated over that 1% for so long in the last 2 years. Throughout COVID, we were 0.2, 0.4%, where we'd have anywhere from 30 to 40 properties available for rent, whereas now we're seeing more of a trend of anywhere between 100 up to 130 properties available for rent, and this does fluctuate each week as well. We've had some weeks where there have been ridiculously high demand, and then 2 weeks in a row, say consistently, it's just dead quiet and there isn't the same level of tenant inquiry. So what I have been telling my investors is that we are starting to see that traditional market return for this time of year. We do find that our peak time around July and coming into August with changeover of our medical staff is now. So we are getting a lot of that opportunity coming through the private and public hospital, which is great, and that's supporting our landlords' properties that are coming up and available for rent over that time. And then our next peak time kind of gravitates into December through to January and February. On the lease renewal side, I'm finding that there are quite a few owners in the last 12 to 18 months that have achieved the peak rent for what the market was offering at the time, and then the market hasn't changed for them. So I've been having to have some of those conversations with them that sometimes can be difficult to explain. You achieved $600 a week as an example for this property 12 months ago, and the lease is coming up for renewal now. We're 9 months in. However, I would suggest that the market is still offering that same level of rent, and here are some of the comparatives. It can be a bit confusing, and I really encourage investors to seek, and whether it's multiple property managers, advice on this. Don't just depend on the property portals. Actually take the time to ask a property manager what is genuinely happening and how properties are being leased, because agents can just mark the property as leased on the amount that they originally advertised it at, and may not necessarily change that amount when they mark the property as leased which isn't then showing true and correct information to those of you who are looking online and doing your searches. Whereas when we look as agents, we have access to data that we pay a subscription for, which gives us a better understanding of what is genuinely happening in the market at the time. And for us here in regional Queensland, and certainly within Harvey Bay, it's very inconsistent each week. So it is really important to seek a property manager's advice. What I will say I've noticed, which is really pleasant, is that we've found that there are less break leases and less people wanting to move at the end of the lease. We are finding that those conversations are remaining of tenants wanting to stay. We're not seeing as a heavy amount of those going out and buying straight away or going out and relocating. So that's really positive, I think, within our market as well. Thank you so much, and I'm looking forward to seeing everyone at the next webinar catch up.
Now I'll come on and do my update for Perth, particularly for the north, and Samantha will provide the update for the south region. And there's a couple of things that I do want to mention. One is that exactly what the other ladies said about the media. The media is definitely reporting one thing and we are noticing another. And I actually did approach the media to let them know about some suburbs that are just not getting any interest and how the market has dropped, and they were not interested in listening to the story. So that was really interesting because it's not as exciting as this, great big rental crisis. So keep that in mind. One thing I would like to say is that tenants are becoming very market savvy and they will not overpay for a property. So you need to really watch that and make sure that when you are advertising your property, that you are definitely seeing in the first couple of days a good sort of maybe 5 inquiries or 5 people book in to have a look at the property. And if you don't get those numbers, make those changes and adjustments to your rent very quickly. What I'm seeing in the northern suburbs, up to Queen's Rocks, is that there's a lot of families. They seem to have a little bit more extra time to find a property. So anything for rent from $600 per week plus is definitely slower, and definitely arranging private viewings for those clients is the way to go, and spending time with those families. So I'm definitely seeing that slow down. There are as many crappy stories for leasing as there are the really good case studies. So we currently have about 4 properties on our books that are getting 0 inquiries, and they're not even overpriced. They're actually a really good price. They're just getting nothing. And so I just want to really show the realness of really what's happening on the ground, is that is a true case study, that sometimes some properties are hit and miss and they don't get them. They don't get the inquiries that we're expecting. I agree with Tara in regards to the normal rental cycle. So I agree. I think we're starting to see that normal rental cycle happening, which is traditionally during winter, the market slows down, and then in summer or spring and summer, it picks up, and that's when the inquiries are present. And I do think that has a little bit to say for the reasons why some properties are hit and miss. So, but then we're getting some random properties where there's 30 people through a home open. So really just be guided by that on the ground experience that your property manager's got. There is an increase in break leases, but I'm not finding that the break leases are because people are trying to find smaller, cheaper properties. I'm finding that break leases are quite popular at the moment for relationship breakdowns and people separating. So definitely seeing quite a lot of that. But again, don't stress if that happens to you and your property. Just speak to your property manager and they'll let you know how to action that for the state that you are in. So overall, it's good, but I feel like investors should tread very carefully when it comes to rent increases, and always ask yourself the very important question, which is, if you're renewing your lease, do you want that tenant to stay? And if you would be gutted that tenant was to leave, then be really reasonable with that rent increase. Sure, do a $10, maybe a $20 increase, but do outweigh the fact that if that tenant does vacate, you will have those extra fees, and it's not going to work out financially the best option. So I do like owners to sort of look at it as a whole. I know we're all sort of trying to get more rent for the property, but do really do your research and be guided, and make sure you understand that the intention of the rent increase at the renewal time is not to push the tenant out. It's just to get a fair price for the property. So that is my little feedback with regards to the north of the river. Now I'll just quickly try and bring Samantha up now, and then good news, I have got that Mark Grogan video, and I'm so excited for you to watch it, because it really, he speaks my language, and he says exactly the way it is. And anyone that is looking in Perth in the rental market at the moment, I know that you are going to love hearing from him. So let's hear from Sam about what's happening in the Perth South and Rockingham area. Then we'll go straight over to Mark, who can fill us in about how tight that rental market is from a sales point of view. And then I'll let you get on with your evening. So here's Sam, followed by Mark, and I'll come back soon.
Hello everyone, and welcome to Australia's largest investors education evening. My name is Samantha Prittis. I work for Soco Realty in South Perth as business development manager and investor consultant. I have been in real estate since 2012 and really enjoy helping investors grow their portfolio or even start their own if they're looking to purchase their first investment property. So tonight I want to talk to you primarily about what's happening within the southern corridor of Perth, so Rockingham, Kwinana area, and just the changes that I've seen down there in the last couple of months. And I also got some trending suburbs as well. So getting straight into it, when I am speaking to my property managers as far as numbers at home opens go, they're definitely saying that the numbers are down. So we recently leased a property in Waikiki. It went to market at $500 per week. This is a lovely home, beautifully renovated, all the nice things. We had 5 people turn up for the home open with 4 applications. None of them were over the asking price. We did receive market price for that property. So put that into perspective, a few months ago, we would have seen many more people at the home opens and no doubt would have been inundated with applications over and above the asking price. So this tells me that that's definitely trending down, and that sense of urgency and chaos has left that southern corridor. With the lease renewals though, they are still trending upwards. On average about $50 to $100 per week, depending on the current lease agreement. There still are a number of tenants that are on old leases, so paying under market rent. So I think that trend will continue. Moving on from all of that, Perth is still a great place to buy and is still trending really well with investors. We get lots of inquiries on a day-to-day basis with people wanting to buy over here. So the suburbs that I have seen take off over the past couple of months would be Secret Harbour and Port Kennedy. Now these suburbs are at the top end, so you're looking at around about that $550 plus mark to purchase, and the rental returns are about $550 to $600 per week. Some properties are receiving higher rent if they've got the pool or the side access or what have you, but on average between $550 and $600 for your nice 4x2 in those areas. They are both coastal suburbs, and they've both had 12.2% in rental growth recently. So both tracking really well and getting a lot of interest for people that are looking to purchase within that price range. So moving on from there, if you don't have that amount of money, or obviously don't want to spend that amount of money, the other suburbs that have been trending have been in the lower socio parts of the southern corridor. So this is in the town of Kwinana. So these suburbs include Parmelia, Aurelia, Medina. These suburbs, best described as can be high risk but high reward. We recently had a client purchase a property in February, was it February? February, for $366,000, a 3x1 on a 700 square metre block. we leased that property for $450 a week. So that's a nice, just over 6% yield in there. One thing to be mindful of when buying in those particular areas is there is a lot of social housing or state housing. So if you're looking, make sure that you're getting your buyer's agent or your property manager to check the street for social housing so that you're not purchasing in what we would consider a cluster of state housing. Other than that, if you get some boots on the ground, you've got a good property manager or buyer's agent that's going out to inspect the properties in those particular areas for you, you can pick up some really good bargains, and we can lease them at that $450 plus mark for the right style of house that's been looked after and all that sort of jazz. So definitely can buy for under that 500 mark in those areas. And if you are looking to spend a little bit more, the Port Kennedys and the Secret Harbours are the ones that have been gaining interest over the past couple of months. That's pretty much it from me. I'll keep it nice, short and sweet. If you've got any questions, please feel free to reach out to me directly or pop them in the chat and I'll be happy to assist. Thank you.
Hi everyone, my name is Mark Grogan. I'm from ONeill Real Estate, and Ashley has asked me to get in touch with a couple of thoughts on how to get your offer accepted as an investor in what is a very, very hot market here in Western Australia. I don't know where you are, you could be anywhere in the country I suppose, but it is very, very busy here at the moment. To give you a couple of examples as to how busy it is, we had a property on the weekend that had over 320 individual inquiries. The Facebook video was viewed over 330,000 times. And it has been just full on with inquiries on that. Now, we as agents in my particular case try and deal with each of those buyers individually because we know there's a lot of questions, especially if you're buying outside of your own state. And with that being the case, we try to answer any of those questions as we go. So I've got a guy whose full-time job is just responding to those inquiries at the moment. That's how many people are looking. So we really are at a point where it's important to get it right as a buyer. What we're seeing in most cases is that investors are making probably about 4 or 5 offers before they get one accepted. There's multiple offers being presented on virtually everything at the moment. In fact, I can't think of too much recently maybe above 900,000. We've had a few where there's only one offer, but predominantly it's been intense with offers. One case recently, we had a property that was on the market for 5 days and had, and I'm not joking, literally 57 indicative offers. That's a huge number of offers. It's a huge amount for an agent to process as well, which will probably lead me to my first point. And that is that as a buyer, the easier and the more straightforward you can make it, the better your chance of getting that offer accepted. Now, we are having to have conversations with hundreds of people in some cases on a property. So we will send you as much information as we can. And I think most agents are doing the same. Send you as much information up front. If you've got questions, contact the council in advance. Get as much information together as you can. Now, the real thing is making sure that you've got a clear idea as the entity that you're purchasing in. If you're buying it in a trust or if you're buying it in your super or whatever it is, have all of that information available up front, because we're not going to wait 2 or 3 days after we've done the viewings to get buyers to be able to get those answers from their accountant or whatever. There's just too much pressure from the other buyers. So the thing to probably consider, and this sounds a little bit, I guess, uncustomer servicey, would be make it easy for the agent, because we have so much that we have to work with at the moment. If you want to have the best opportunity, just make it straightforward. And that comes down to keeping it really simple when it comes to conditions. Get a building report, great. Get a pest inspection, fine. If you want to make it subject to random due diligence or things like that, you're just not going to get your offer accepted. That's a fact in this market. If there's multiple offers, you won't get an offer accepted with due diligence. So get to know the area you want to buy in, speak to the council, maybe get a bit of a contact going at the council if you've got things that are development or whatever the situation might be. It's all very much a case of you're going to have to work it out as you go when it comes to some of those things. And as I mentioned before, you'll probably have a couple of offers that might get rejected before you get one accepted. With that situation with 57 offers, some of those people had been in the pool looking, and I can't even recall how many offers some of those would have made, but there would have been people in the mix that would have had over 5 offers rejected, including perhaps their offer on that property. So it's a very, very intense time in the market. As agents, the more straightforward you can make it, it's going to take a couple of days. A couple of things that don't generally fly. Personally with me, and with most agents, we're working for the seller. So as much as it's hard for us to wear two hats, we are working for the seller, and we're in the hottest market we've seen in a long time. We're out to get the best possible offer for that seller. Now, if you don't see value in a particular property, that's cool. Don't make an offer. If you do, give it your best shot, and give it your best shot straight up. There won't likely be a chance for a counter offer if the agent has something that's 30, 40, 50 grand higher than yours. They won't come back to you with a counter offer. It'll just go, and then you're gonna have to wait for the next one. There are some agents out there that are presenting offers off market. Personally, again, as a selling agent and as a seller's representative, I think that's insanity. But hey, I can't speak to the sanity of other people in this industry. So what I would suggest is that know what value is and know where you're going with it. Talk to agents as well and ask them if they can give you a bit of a ballpark as to what other things have sold for. Because we're in an increasing market right now, what I think is very, very important to do is to make sure that you're up to date with real-time data. Now, they might not be able to tell you addresses because we do have limitations about what we can say before a property goes unconditional, but getting some ideas from agents locally on real-time sales, because the stuff you're seeing on RP data and some of the other portals, that's 3 months old. The market's increasing. In 3 months, that data is now irrelevant. We had one recently that the expected sale price on it was based on the sales data around about 410. It went for 470. I didn't expect it. The seller didn't expect it. The only person who expected it were, well, probably about 5 buyers actually, because they were pretty close to that final price. So the market is changing at a rapid rate, and if you want to get an offer accepted and have a true understanding of that market and those values, get to talk to the agents, and not bombarding them with the same copy-paste inquiries would be another thing I would suggest. Ask them the questions, and then if you're presenting an offer or if you've got further questions, obviously come back from there. But as soon as the property goes live, we get bombarded with a heap of questions. Half the time, as a buyer, they haven't even read the ad because most of those answers are actually contained in that. So another thing, if you're trying to get your offer accepted, just read the ad because most of the time the information is probably there. Although there are some pretty trashy ad writers out there, I'll concur. So Ashley did ask me to answer a couple of questions. One was best way to make sure you're putting in your best offer. I think I've answered that in the sense that just getting a good idea of the market from some of those local agents. The other thing is asking for deals off market. By all means, we want to keep you on our database. We're not selling before doing the viewing locally. So we are always going ahead with a viewing unless there's an extreme circumstance like a very difficult situation around a tenancy or whatever the situation might be there. But over 160 odd sales last year, I had one that we did that way, and that was due to some health situations for the tenants. So that's pretty much the answer on that. If agents are doing it off market, in fact, if they're offering things off market, probably try and get in their good books as a buyer because they're not working for the seller. That's my opinion. Although if you're looking to sell a property, we can certainly speak further about that, or speak to Ashley because she's also extremely good with all of that. That's just my little plug. One of the other questions she asked was keeping the contract clean and free of complicated conditions. Yeah, that comes back to that due diligence question and some of the situations around those sorts of arrangements. Just keep it simple. If things go wrong, they won't go too far wrong in many circumstances. I'm sorry about that cut. There was a technical problem halfway through what I was talking about. But what I was, I think, covering, as I've had to fix that technical problem, was due diligence. So my suggestion is know where you want to buy, talk to the council, get an understanding of that. There is so much information on their websites as well. Certainly, I know in Perth, I don't know what it's like about around the rest of the country. Intramaps, the mapping tool on the council websites, is fantastic. It'll tell you the zoning. Obviously, the agent can tell you the zoning as well, but it's got aerial measurements. It's got all of that kind of stuff that you can work with, and it's a very, very powerful tool for all of that. The other thing about due diligence is any conditions you put on a contract around due diligence, just make it unappealing. If a seller is going to take their property off the market while you go and do some research and then potentially pull out of the contract, Not going to happen. It's just not going to happen in this market unless it's a really unique property where they have some sort of a reason that they would let you do that. But no seller wants to tie their property up in what is essentially a cooling off period, because we don't have a cooling off period in WA, and that's not going to basically fly with most people. They're all moving on. They're selling it because they want to sell it. They're selling it, they want to move on. They don't want to tie it up for weeks and weeks with some unknowns. So the other point with regard to due diligence is, and this is not insurance advice because I'm not qualified to give insurance advice, but I would say check the PDS to see if the product is right for you. But title insurance is an extremely useful tool. I have been the beneficiary of a title insurance claim that went in my favour, and it was a really helpful thing at that time with that particular situation that we found ourselves in. So look, you're buying older properties in older areas. Unfortunately, you don't need a license to go to Bunnings, and people have been to Bunnings over the years. They may have done something on that property. They might have built something that they thought they could build. They might have done something that they thought would look good. They might have done it really, really well. It might not be council approved. So I think title insurance is a very, very good thing from that point of view. So speak to your settlement agent about that, and they can give you some real advice that you can possibly rely on a little bit more than me, the real estate agent, giving you what is not insurance advice. The other question that Ashley asked me to talk about was in regards to I'm so sorry. Two things just pinged at me on at the same time there. This is what happens when we're doing it live. This is distraction. The question around deposit. The better the deposit, the better the result that you're going to get. If you have a good solid deposit on that contract, then that's going to help. If you have a broker that said, don't worry about pre-approval at this point in time, just go and make an offer and then we'll see how we go when we submit the application. As agents that are dealing with multiple offers, you're not going to get it. It's just how it is. Unless your number is extraordinary and they're prepared to take a punt on it, I would say just push your broker to get conditional approval. If they don't want to give you conditional approval because they're too lazy to submit an application, maybe find another broker. Again, not financial advice, just my opinion as a real estate agent. But conditional approvals make a big difference. When we see that come through and we know that there's been assessments, we know that credit checks have been done, we know that all of that stuff's happened, that makes a huge difference to what we're trying to do. One of the other questions that Ashley asked me was around why properties are selling so quickly. There's a couple of reasons why Perth is so popular right now. Number one, we have the highest household income of any state in the country apart from Canberra. We have the lowest median house price of any state apart from Darwin or the Northern Territory. And we have thousands and thousands and thousands of people waiting to move into the state. We have the vacancy rate that is at the lowest it's ever been. We've got virtually just a handful of properties for sale. In particular, when you look at the number of properties for sale, a good component of that is actually blocks of land, which are 3 years away from having a house on them. So the amount of available accommodation is at the lowest it's ever been, and that is being recognised by people all around the country, including the people who live in the state that are trying to find a rental. We've got families that are buying houses for their kids because they can't get into a property, and mum and dad can't. When I say they can't get into a property, they can't even get into a rental. So mum and dad are buying a house going, well, we'll put in a bit of money in and we'll get an investment property. You can rent that off of us. So that's what's driving all of that. Properties are selling really quickly, but it doesn't mean you can't get it. Just be organised, be ready, make sure you've got a great property manager lined up, which I think you probably do if you're on this particular call. And if there's any questions anytime about what's happening in the Perth property market, we'd love to have a chat. It's Mark Grogan from ONeill Real Estate. Thanks so much, and I hope you have success in all of your endeavours in purchasing a property over here. Thanks so much for your time.
So I hope you found that super interesting. I thought it was really good to bring in a guy that is amongst a suburb that is super popular with those that are looking in Perth. So those little tips will all help you make sure you get your offer seen and also just feel better about the process. There are so many people missing out. So I hope that was helpful. And I also just wanted to highlight a new product that has come available. Might be for you or somebody that you know that is buying their first investment property. This is an online investor boot camp that myself and another property manager in Queensland has created. There hasn't been, or there isn't any other online course for investors that's done by property managers, and this is very much about having a sustainable investment journey, buying the right property, holding on to the right property long term, finding the right property manager in your state to look after the property, and things that you should expect and understand from a property manager's point of view and an investor's point of view when it comes to maintenance, communication, and all of that. So a lot of people, I think, just buy property for the sake of the property because they think that that's the thing to do without having any plan in place. And we want you all to become intentional investors and not accidental investors. So intentional investors mean that you have a very clear plan, you have an exit plan as well with your investment journey, which I think is something really interesting. And we talk about this in the course about your exit plan, whether that is a time frame and that you only want to hold on to a property for 10 years, or maybe it's a financial exit plan. So when the property's worth this much, you'll then exit. So there's lots of things there that are really worth considering. So like I said, head over to the website empoweredinvestor.co. You'll find the details and all the videos for the bootcamp there, and you'll also see a free resource that you can download, which has got experts all around Australia when it comes to not only property managers but buyers agents, settlement agents, and the whole lot. So I hope you find that helpful. Thank you for jumping on, and I will have this emailed to you for a replay, so please feel free to share it with any friends or family that you think might find it useful. Have a good night.